What's going on YouTube, and welcome back to my channel. So in today's video, we're going to talk about my favorite setup, probably the easiest setup of all time, liquidity grabs to trendline breaks. Before you begin, you will want to have a great understanding of trend lines, draw on liquidity, and probably market structure as well, because you ultimately do want to be trading with trend. Notice how on the higher time frames we're currently coming from an uptrend. We start to form a minor downtrend here, ultimately just retracement. Then we get back to this 41.36 range, grab liquidity, then we get our trendline breakout. Notice the after effect of trendline breakouts. They always form displacement. Once we get displacement followed by a break of structure, we have confirmation that this trade's 100% going to work out and go take out the higher time frame drawn liquidity. Now, the reason why I love this setup so much is because you don't predict the market whatsoever. You react. You patiently wait till the stars align, and once you see that body close over the trend line, you enter the trade. Now let's dive into a live example. First, you want to have context of the market. So as we can see here, notice how we are currently in an uptrend. We have higher time frame drawn liquidity up here. So let's mark this out. We have sell side liquidity here. We have some more sell side liquidity down here. So now that we've gotten context of the market, we can see quickly that we are currently on a liquidity grab. Now, why is the market doing this? Chances are retail stops are here. So what does the market like to do? The market likes to gravitate and trade stop loss to stop loss. So rather than us predicting the market, let's just wait for our trend line to break. And therefore, we have no need for predicting the market, but we have a guaranteed A+ setup that we know is going to work out. Now let's play this out. Notice where we reject, right? Bingo. So at this given point, we're looking to take our longs. We're going to take our longs directly on this entry here. Look to take out our PT up here, but our stop loss at the most recent pivot. Here goes a 3.04 risk to reward trade. Let's play this out. And notice how we hit our PT very fast. Now, the reason why we hit our PT so aggressive is because of the trend line break. So we stopped out a group of participants that were previous long down here. Chances are their stops are right here. Buyers stepped back in, used their stop loss as fuel to get this aggressive move back up to our higher time frame drawn liquidity. Now let's dive into another example. Here goes another example of the trade setup working out in the same exact trading day. Notice how price is starting to get this pullback here after we took out the higher time frame drawn liquidity. Now we need to mark out the intraday levels. Notice how we have sell side liquidity here. So we're going to mark that out as internal sell side liquidity. We have internal buy side liquidity up here. We have buy side liquidity up top. Now let's play this out some more. Notice how we take in sell side liquidity here. Okay, so at this given point in time, notice how we have swept internal sell side liquidity and failed to displace below this level. Now at this given point in time, we're going to take our trend line and wait for this candle to close. If we can get a body close above this range, we will enter our longs and look to take out internal buy side liquidity, then buy side liquidity. Notice how we have our body close. So at this given point in time, we're going to look to take our long, target the highs, stop loss at our most recent pivot, which is down here. And here we go, a 2.19 risk to reward. Let's play this out. And first internal buy side liquidity taken and buy side liquidity is taken. Now, why I love this setup so much is because it repeats itself all day. You do not have to predict the market to make money. It's honestly best to not predict the market. Just be patient and let the trades come to you. Now let's dive into a bearish example. Notice how we currently got a market structure shift to the downside here. Let's mark out our internal buy side and sell side liquidity. We have sell side liquidity down here, internal buy side liquidity, more buy side liquidity. Now let's draw out our trend line here. Let's hit play. Notice how we failed to get a body close, so we're going to slightly adjust this. Now at this given point in time, we're going to want to look at a higher time frame. Now what can we see? We have a bearish equilibrium block here. Notice how we are failing to get a close above this range. So at this given point in time, this is actually going to be our form of liquidity. It doesn't have to necessarily take a pivot. An equilibrium block, a volume imbalance is also a form of liquidity. So here's a little bit more advanced example here. Notice how we're getting these slight rejections, struggling to get a close above this range. Let's play this out. Notice how we can't get a body close above this range, right? So instead of taking the equilibrium block entry, wait for the trend line breakout and have 100% confirmation that this trade is going to work out. Now we got our body close below the trend line, so we're going to take our short position, start it here, stop loss at the most recent pivot high, look to target sell side liquidity, and now we have a 2.32 risk to reward trade. So let's play this out. And notice how we go straight to our PT. We even retest our entry and give you a second chance to get in the trade, and then we get displacement straight to our price target. I hope this video helped a lot. Please like, comment what you guys would like to learn next, and I'll see you guys in my next video.